I'm Greg Hunter. Welcome to USAWatchdog.com. To call this guy the top trends researcher is kind of really an understatement. To me, he's the only trend guy out there. He's had many accurate predictions way ahead of time. They are documented in the Trends Journal. I have on from New York the publisher of the Trends Journal, Gerald Celente. Gerald Celente, good to have you on USAWatchdog.com.
Oh, Greg, it's always great being on USAWatchdog.com, and I thank you for all the great work that you do, the great people you bring on your show, and how you put out so much terrific information that helps so many people.
Well, you're helping me put it out there, and I can't. You called the housing crisis, the crash in '08. You had many different predictions that you've had. If people want to go and take a look at your track record, they're welcome to. I'll just attest to you as being a reporter. I know you've made many predictions ahead of time that were spot on. And I want to kind of get with your 2016 trend, but I want to just take a quick look at 2015. Dreadful year economically. They couldn't raise rates in September, the Federal Reserve. We had this flash crash in September. All the indications are down. What is the economy in 2015 setting us up for in 2016?
Global recession. It's already happening for anybody that wants to open their eyes and open their ears. Let's start with the commodities. Go back to 2011 when commodities were really high. You had a ton of iron ore, for example, was selling for around $200 a metric ton. Today it's under 40. Copper, aluminum, nickel, zinc, one after another, from wheat to dairy products to corn. You look at the Bloomberg index, it's down to 1999 levels on average. What is that telling us? There's too much product and not enough demand. So people tend to segregate things, and they say about, oil. What? Same thing with oil. Too much production, not enough demand. Matter of fact, when you start tying all these trends together in a globalnomic sense as we do, you can see the implications coming from many different directions, and we'll go into some of them. But just briefly, for example, Saudi Arabia. Hey, they're busy bombing Yemen, right? They're going to have some problems. They need oil, Brent, to be at $100 a barrel to break even. They're now down to $45 a barrel, and now they're floating bonds because they need dough. So what we're looking at is a global slowdown because commodities are the canary in the mine shaft. They're telling us what's going on. Now layer things on top of it because it's very important. When the whole boom began, the fake boom from the quantitative easing, where did all of this hot money go, or a good portion of it? Into the emerging markets. And that's what boosted a lot of them. Meanwhile, over in China, they're juicing the economy after the crash of, the panic of '08 hit. So they boosted their economy. They're buying the resources. The emerging markets are going up. Now, what's happened? Take a look at their currencies. They're at the lowest level on average since 2002. The rial, the ruble, the Turkish lira, the ringgit, one after another. Boom. Now, let's go back. All that hot money that went into borrowing in those emerging markets, trillions. They got to pay it back. Now, you mentioned, we're talking about raising interest rates here in the States. When the interest rates go up, the dollar goes up, their currencies go lower, and they have to pay back that money that they don't have because they can't sell their natural resources at a price that brings them in profit. So what you have is in a bubble, a debt bubble that has built to about $220 trillion worldwide since this fake quantitative easing, negative interest rate schemes have gone on central bank after central bank. One other factor in this. Remember, their currencies are crashing. Their economies are... Brazil right now, they're talking about a recession, in their words, coming out of that country out of 1930s Depression era levels. Now, what's going to happen? Take a look at the real, the Brazilian real. They got to pay back all this huge debt that they have. Their currencies are going down. And inflation is going up because it costs them more to buy everything because their money's not worth anything. And what do? They got to raise interest rates. Perfect. Raise interest rates at a time when your economy is going down. Oh, that'll really spur growth, won't it? So you can see, Greg, there's a debt bubble that's ready to burst in 2016, the likes of which we've never seen in the history of the world, part one or part two.
And if the debt bubble breaks, you saying that these bonds, sovereign bonds, and I would suspect even the U.S. Treasury, all of them are going to go poof?
Yeah, particularly the foreign ones, and then all that corporate debt and the private debt. Look at the Standard & Poor's just came out with one of the rating agencies, Fitch, came out with a whole situation on both the developed and the emerging market debt levels in the private sector are huge as well. So it's going to come from a lot of different levels and a lot of different ways. Look what's going on over there in Europe. They've announced earlier in the week that they were going to keep that quantitative easing going into 2017. 60 billion euros a month buying up bonds. And now they're keeping the deposit rate down to minus 0.3. You want to buy some bonds? How about buying some Swiss bonds? You know, I like you, Greg. I got a deal for you. You buy these bonds, and because you're such a nice guy, when you cash them in, we call it negative yields, but that means we're going to give you less money than you loaned us. You can't make this up. This is never, all the things I just talked about on interest rates, negative yields, have never happened before in the world. This is brand new. They're over their head. They're out of their league. They don't know what they're doing. They're making panic decisions, trying to keep Mr. Ponzi alive.
Are we going to have a big financial calamity crash bigger than '08?
Oh, much bigger. This is going to be Depression era levels. It's already happening. Again, go around the world. You know, everybody talks about the refugee crisis from all the bombings going on, the wars in the Middle East. Look at the migrant crisis. It's a whole different one. Venezuela. Think of the resource-rich nations. Brazil, Chile, Colombia, Ghana, Algeria, Nigeria, Niger. Go around the world. South Africa. You're going to start seeing flows of people leaving their countries that weren't doing well before. What propped it up was that they had, commodity prices were high, so it kept things kind of level for a while. Now they're crashing. You're going to see waves, human waves, of people leaving their countries looking to earn a buck, a lira, a euro, a ruble, whatever it might be. You're going to start seeing waves. And just to put this into perspective, go back to World War II. Think of the refugee crisis. There were 2.3 billion people on the planet in World War II. Guess what? We've added 5 billion since that time. 7.2 billion, 7.3 billion people. A lot of them out of work. A lot of them bombed out of their countries. So when you put the globalnomic perspective together, it's more than just an economic calamity. It's a socio-economic and geopolitical crisis.
And, one of the things, and I hear this all the time, and it's you're saying, I know it's you, people, I don't even know if they even realize they're quoting you, but they say this, when all else fails, they take you to war. It sure looks bad over in the Middle East with Turkey buying this oil and Russia finally bombing these assets. I've been saying for months on my channel, why aren't they bombing the whaleheads? Why are they letting these guys sell oil for arms? And Now we found out it's a NATO country helping them. But this whole thing just looks like a huge ball of glue mess that's going to just explode over everybody's faces. And then add in the Chinese and the South China Sea and the U.S. What's your forecast, your trend for 2016, when it comes to war? Are you finally going to hit this when all else fails, they're going to take us to war?
Yes, that unfortunately, when all else fails, they do. Look, go back to 1929, a crash, right? Market crashes, Great Depression, currency wars, trade wars, World War. Voila, here we are again. Panic of '08, Great Recession, currency wars, trade wars, World War. Look what happened last summer.
We're right at the World War. I'm sorry to interrupt you, but we're right at the World War break coming up. We've had all the other stuff. We've had the currency crisis, the market collapses, and all. But we're going to have another market collapse again before this war.
I believe so. And when the market collapses, the war talk will heat up. Look what just went on in France with that terror strike. You look at Hollande, that little boy. His ratings, approval ratings, the lowest in the history of the Fifth Republic in France. The lowest in history. Boom. Phew. Up 17% since then. And they're talking tough now. They're bombing away in Syria. England. They just voted this week. Boom. Bombs away over Syria. Germany into Syria. They're sending 1,200 troops. And by the way, I just heard from our defense secretary, this little guy, this Ashhole or Ashton, whatever his name is.
Ash Carter.
Yeah, Ash, yeah. Quote, "We are at war." We're at war? Who declared it? You declared it? The president? Congress is supposed to declare it. This should be major news. We got a little clown out there, a guy that couldn't fight his way out of a paper bag, that loves to talk tough and wants more war. We're at war? Who declared war? Because there used to be a thing, you may have heard about it, Greg, the Constitution, that Congress is supposed to vote to go to war, and Congress won't even vote. So we're in Syria illegally. We're in these countries we should not be in because it's against the Constitution. You know, the Founding Fathers, beginning with George Washington, a real warrior. Guy fought, not play basketball, shoot pool, or play golf, drive pickup trucks. The real guy, the real deal. His farewell address. No foreign entanglements. And people say, well, it was different. No, the world was at war big time back then. Now, Franklin, Adams, Jefferson, Madison, all of the Founding Fathers, no foreign entanglements. So the bigger this gets, we're looking at actually a World War I scenario. We had a lot of stupid people making a world war happen that could have been totally avoided. Every history book will tell you that. And it's the same kind of stupidity leading into more and more. And again, all I say to people, show me the success of all of these wars, beginning with Vietnam up until now. What have they accomplished? Have they made things better? Do you think that by expanding it, it's going to get better? So no, they're going to take us to war because going back to France, it gets the people's minds off the economic problems. Kids are signing up to the military. They're waving flags. What do they got? Over 10% unemployment.
And this time World War I was tame because they didn't have nuclear weapons. You even have a Democratic congresswoman from Hawaii who has the kahunas. She's a woman; she doesn't really have them, but she has the guts to come out and say we're looking at a nuclear war with Russia. We could be starting a nuclear war with Russia. I don't know what her exact quote was. This is from Hawaii. This is a Democrat. This is a presidential party who's basically warning of a nuclear war, a congresswoman from Hawaii. This time it goes nuclear, or does it not?
It will be the war that Einstein predicted. He said, I don't know what weapons will be used in the Third World War, but the Fourth World War will be fought with sticks and stones. It's wars of, I was a keynote speaker at VMI, Virginia Military Institute, in 2000. Matter of fact, I had lunch with General Anthony Zinni. He wanted to meet me. And they brought me down there because I had written Trends 2000, and I talked about New Millennium Warfare. Now remember, this is months before 9/11. And I'm talking about what it's going to look like. You know, there's that saying, Greg, that generals are always fighting the last war.
Yeah.
And so they had me down there. So it's more than nuclear. It's going to be suitcase-sized nukes. It'll be dirty bombs. It'll be biological warfare. It'll come from all different directions, and maybe nuclear as well. So what I'm saying is, you're looking at people that are psychopaths, sociopaths, and megalomaniacs around the world that keep beating the war drums louder. There's no way out of this. If the big war goes, we all go.
In your commodities, you were talking. You left out gold and silver in your commodities.
You're right.
You left them out, and I wanted because people are going to probably sit there going, "Why did he talk about gold and silver?" And I wanted to talk about that and what people could do. First of all, what do you think about gold and silver owning the physical metal? My sources are telling me, and I have people that buy for rich people by the ton, and they say the demand is off the charts. And silver eagles are off the charts; they're running out of them. But the long and short of it is, what's your trend for gold and silver, physical metal, not GLD, SLV, gold shares, that kind of thing? What's your trend for that?
Here it is: U.S. demand for gold bars and coins up 207% this year. The World Gold Council, global demand rose nearly 10%. And it's not only the people that are buying it. Central banks, the purchases reached 175 tons, near the record high level for the same period last year. Third quarter U.S. demand for bar and coins, as I said, was up 207% from a year ago. Global jewelry demand picked up 15% in India. China investment demand grew 70%. So, as you pointed out, when I talked about commodities, I left gold out of it. Here's why. I just read the demand numbers, and you're telling what you know as well, people buying the stuff up. That's the difference with gold and silver. The other commodities, demand is way down. Copper, iron ore, aluminum, zinc, everything is down. Demand is up for gold and silver. And again, to me, it's the ultimate safe haven. Greg, I've been saying now, when gold started collapsing back in particularly 2012, 2013, that the bottom of gold was around $1,050 an ounce. I've been saying it forever. I gave that number out because that's about what it costs to pull it out of the ground. You're seeing demand of the physical go way up. I believe, I'm not a conspiracy theorist, and everybody that knows me, I don't talk about issues about 9/11. I don't talk about things that I don't have solid proof on, so I don't want to go out of that realm because I like to stay with the data that I have. So I stay away from things like that. I believe gold prices are being manipulated with all of the naked shorts. You could go back to when the last collapse of gold started happened on the Shanghai Gold Exchange. Within 3 minutes, some 30 tons were shorted. And this was a day when the Japanese markets were closed. Now, we know the facts. The facts are these. The LIBOR rates, the interest rates, they're rigged. The Forex market, 5.3 trillion a day being traded, rigged. Not a conspiracy theory. 6 banks were convicted, not charged, convicted of felonies for rigging the markets. So, why do I believe the gold prices are so low? Because it goes back to the central banks. If people could see the fraud of all of these trillions of dollars and yuan and euros and yen, this digital currency printed on nothing and backed by nothing that has falsely propped up the equity markets for a while. They could see what a fraud it is. Why would you want to own those currencies? You'd be flocking into gold, and it would kill their Ponzi scheme. Now, I mentioned about the declining currencies. Suppose you live in Brazil. Hey, suppose you live up there in Canada. Was the dollar? It's down about what, 25%? The Canadian dollar against the U.S. dollar. Would you rather have gold, or would you rather have loonies? Would you rather have real, or would you rather have gold? Would you rather have Turkish lira, or would you rather have gold? So that, to me, is what it's about. It's about planning for the worst. And as you mentioned, we're not talking about GLDs. We're talking about physical. Look at demand in Europe, up 35%. It spiked as the refugee crisis started getting worse and more war talk started heating up. So the people, that want to prepare ahead. Look, what are you going to do? Put your money in the bank? What do they have? Negative interest rates?
Is the spike in gold and silver demand, is that a precursor to this crash you're talking about?
I totally believe so.
So you think that the signal, the big rush into gold and silver, is signaling a big crash coming and coming soon?
Yes, because again, everyone knows. Again, I'm not making this up. In this quote free country of ours, with the central bank, this private group that's running the show, we're not allowed to read their minutes until 5 years later. How about, I got it. We're going to bomb other countries to bring freedom and democracy. How about starting here? So anyway, go back and read what happened as the minutes were coming out 5 years after the Panic of '08. It's right there for everybody to see. They didn't have a clue what was going on. They were totally out of their league. They don't know what they're doing.
And you think it's worse now?
It's definitely worse. Look at the bubble they've created. Again, a $225 to $250 million debt bubble.
Trillion.
A trillion. Thank you. Thank you for correcting me. $1 trillion. Yeah. So again, go back to the emerging markets. Go back to one after another. And look at their currencies collapsing.
So little guys are sitting here going, wow, what do I do? Do I hold some cash? Do I go buy gold? Do I pay off my house? Do I get my car tile? Do I buy food? Do I buy water? Do I buy dog food, cat food? Do I fix my plumbing? What do people do to protect themselves from this?
Well, again, only speaking for myself, because you know the motto of the Trends Journal, think for yourself. So we put out the information, then we tell people, you do what you want with it. You like it, don't like it, fine. Here it is, here are the facts, this is why we see it happening. Speaking for myself, I have GC's 3 Gs, guns, gold, and a getaway plan. And, I'm about an hour and 45 minutes north of New York City. Remember a couple of weeks ago, they're talking about a terrorist strike in New York City?
Yeah.
Yeah. You know what the chaos you'd see?
Oh.
Yeah, try getting north out of New York City.
Yeah.
You got these tiny little bridges. You got the 3rd Avenue Bridge.
I used to live there.
Yeah, so you know what I'm talking about.
It's a bottleneck
The Henry
city.
Hudson.
The Lincoln Tunnel.
Yeah. You're not going to get out.
It's GW, yeah. Well, it'd take you a long time.
It would take you a long time, and then suppose, at the worst case scenario, they whack a nuclear power plant like the Indian Point power plant. You're going to see chaos like you've never seen before. So what I always say is prepare for the worst. Because if the worst doesn't happen, you lose nothing. If the worst happens and you didn't prepare, you can lose everything. So for me, that's it. It's guns, gold, and a getaway plan. I have maybe 2 months worth of dried fruits and water and those kind of things to take care of myself. If things got worse than that, I'm going to get out of here. I'm going north. I'll go to Canada. It's four hours away. And from Canada, then I'll decide where to go from there if there's going to be that kind of chaos. So that's the worst case scenario. And by the way, that was my plan and I've talked about it as soon as it happened, following 9/11. First thing I did after I called up the person I used to be going out with, to tell her to get all the money out of a bank, Marie Pierre. She's back in France now. They wouldn't give her her money in Key Bank. But her being French and demanding it, she got it. The number two thing I did after I hung up the phone, I picked up, I had my money. You used to have a thing called interest rates back then, where you could put your money in the bank and get back more than you put in there. I had CDs in Fleet Bank. Fleet's gone. Anyway, call up. I wanted to wire transfer the money to Rhinebeck. Our offices were in Rhinebeck at the time. Sorry, Mr. Celente. Certificates of deposit of financial instruments traded on Wall Street, and Wall Street's closed. Yeah.
A lot of people are going to not get their retirement. I mean, when Wall Street breaks down, I mean, is that a trend for 16? I tell my friends, I mean, you think that your wealth, these stocks and this stuff, if the brokerage goes down, you got nothing. SIPC's got $2 billion or something. They got very little for Securities Investment Protection Corporation. Exactly. I mean, do you think people are going to lose everything?
I'm just telling you what happened. I could not get my money out. It was closed for a week. If there's a terrorist strike, they will use this as the excuse to rob us, to try to figure out how to mitigate the disaster that they've caused. So I believe that if things get really bad, they'll close the Wall Street, they'll call a bank holiday. Holiday? You can't get your money out. How many more countries do you have to watch it to see it happen? Cyprus, Greece, it'll happen. So what I believe they'll do is they'll devalue the currency. That's the way they're going to get us out of this. So go back. A wild thought? Go back to 1933, that lovely bank holiday that they called the Federal Emergency Banking Act. Gold used to be pegged to the dollar in those days at around, I think it was about $22 or $20.67.
$20.67. That was the going rate, $20.67. A gold piece, a $20 gold piece, is a little less than an ounce, 0.967, I believe it is, because of that. They had to make it that 67 cents, which in today's money would be about 4 or 5 gallons of gas.
All right, so now, being that you know the deal, after they forced the people to turn in their gold on the penalty of law, what did they do? They raised the peg of gold to the dollar to $35. Ta-da! You just lost 70% of your purchasing power. Right?
Yes.
They'll do the same thing. I believe they'll devalue our currency. They will use a terror strike, false flag or real, to close the banks, close Wall Street, and steal more of our dough to bail themselves out.
Gerald Celente, the publication, the Trends Journal, the website, trendsresearch.com. Oh, before we go, you're having a little get-together in Florida where people can meet and greet you. Could you please tell us a little bit about that?
Yes, if they go to our website, you'll see the conference over there. We're having it in Naples, Florida, a week-long conference from January 10th to 16th. And Gary Null, who's a famous health practitioner, whole health healer. So this is going to be a mind, body, spirit, and trends forecasting retreat. We've never done anything like this before because, as I mentioned, it's all connected. All things are connected, like the blood which unites us all, allegedly said by Chief Seattle. So this is going to be a retreat to get you in the best shape, physically, emotionally, and spiritually. I'm not talking religiously. And to get you on path for the trends ahead. So we're going to be putting out all the trends for 2016, the ups and downs, the sideways, the things to take advantage of, and it'll be in a beautiful, beautiful setting, with healthy food, massage, the whole thing. So there's never been anything like this done before. So if you go to our website at trendsresearch.com, hit the conference, and you'll see what a wonderful time you'll have down in Naples, Florida, right in the winter over there in January.
Gerald Celente, publisher of the Trends Journal. Thank you for the preview of 2016. There's a lot. You put out a lot of information. This just skims the surface. I took a look at your third quarter publication. You were talking about, new inventions like things like carbon material that are basically eliminate all friction, and you do all kinds of stuff about why we don't have democracy in America anymore. And I suggest that people become a subscriber if they want more of this information. It comes out all the time, quarterly, monthly, alerts, all kinds of things. Thank you, Gerald Celente, publisher of the Trends Journal, for coming on USAWatchdog.com.
And thank you, Greg Hunter, for all that you do and for having me on. Keep up the great work.